ready to roll. Come on, people now. Miller time. Alex is here. The 9 to 5 takeover. Cool beans. Look at this, and Brandon's here. Here you go, Mr. Brandon. Lucky Lefty's here. Manny's here early today. Way to go. Okay, so let's go down here. Edit site. We're gonna cover some interesting shit. What the heck is this? Edit site. Okay. Just give me a couple seconds. We're still getting a little warmed up here. Not published yet. Pages. Nope. Close that. What the heck is this crap? Pages. Daily caption, blah blah blah. Squeeze page, past stock trades. Here we go. Let's see what we got. How's the guys going today? Doc, if Moses had known James, there would have been 11 commandments. Oh no. Look at this. I found my old website from 2013, week 18, May 4th, 2013. Look at that. 2013. What do you got? Week 1. Nope. I can't see that. Cool. Alright, let's get started. Oh, look at that. April 26, 2012. Holy cow. I found my old website. I'm seeing if there's a way that I can take the old websites, all this information here, and put it up onto my new website. So we'll see how that happens. Germ, how's it going? Sartran, Tambam. That's interesting names. Michael Sinclair Docs over here on Instagram also. Alright, so let's just get started. Jump on in. Let's get started with where do we normally start every week? We normally start every week with the disclaimers. Everybody loves disclaimers. Let's turn this thing around so everybody can see a little bit better. Come on, right there we go. That works. And I missed a few. Charles the Warrior is here. Way to go. Michael Soto. Did I see Miss Sheila? Good evening, Miss Sheila. How are you doing this evening? Ford 85. I remember 85. That was a lovely time of year, I have to say. So let's get started. It is Friday. Week number 31 is done and over with. 31 weeks. Now, there's 52 weeks in the year. Okay, 52 weeks in the year, and we just finished with week number 31. So Monday, week number 32 is coming up, and I believe that is week number 6 for the third quarter. Week 6 for the third quarter. Alrighty. So let's get started. First and foremost. Oh, that sounds horrible. First and foremost, my name is James. Here is Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, the 10-Minute Trader was originally created for my 9-year-old daughter when she was 9. This was back in 2008, quite a ways ago. Now, she wanted to learn to trade just like I was trading, because I was making ungodly amounts of money. DKNH. DKNH. What the heck is DKNH? DKNH. We can't find that symbol. DKNG. That's a different story. DKNG. DraftKings. Are you kidding me? Really? DraftKings? Okay. Did something interesting happen? Yeah, we're going to do a no for that. Look at this mess over here. What is this? Oh, the time frame's all messed up. That's the 1 minute chart. I don't want to look at that. 1 day, 1 minute, 1 day, 1 year. That looks better. That looks more normal. I like normal. I like things to be same. Hey, Julie C. How are you today, Julie C? Sheila, on Thinkorswim, how can you tell if your stock has been called away? What does it look like? Well, usually it'll look something similar to this. Okay. Let's see if I open this up a little bit bigger. Now, can anyone see, someone tell me if the screen on YouTube is working? Now, Sheila, are you ready? When you see your ticker symbol over here, okay, your ticker symbol's over there, and very next column over, see where it says ITM? Okay? ITM means in the money. Means you're going to be called away and you'll be back into cash. Usually that's the way it works, and that's what we like to look for. I like seeing these ITM, ITM, because it means I'm back into cash in the following week. YouTube is working. Yay! YouTube. All right. Let's get my my composure under wraps. Wi-Fi is not connected. Huh. Give me 1 second. I got one more phone. See if I can get it working. Just give me 1 second, guys. Don't go anywhere. There we go. Come on. Ah, crap. Okay, let's get out of there. Let's get out of there. Uh-oh. Uh-oh. It's there somewhere. There we go. Sorry about that. I was trying to get this other phone working. And it looks like it is working. Cool. Alright, can we log in? Ooh. I don't know. Let's see if we can log in. What's on my mind? Alright, well, that's not going to work. So, if it's ITM, it's always called away. The feed glitched. Yeah, I'm in the money. In the money, that is. John Deere looks to have some upside at earnings call. Is that a smart hold for dividends or sell? Caleb, give me 1 second. I'm actually going to write John Deere down. That would be DE. We will take a look at John Deere in a little bit, just give you an idea. So, that being said, let's just jump on in and get started. Alright, so DKNG. Now, DraftKings, you may think it sounds like a good place. DK, what is it? Damn it. DKNG. Alright. DKNG. Alright, so now we're going to look into Yahoo Finance to see how many dividends DraftKings has paid. Yeah, so, see what it says right here? There are no dividends in the selected time frame. That means that's a no. Okay, why would I want to take a look at a company that doesn't offer to share its profits? That's what I'm here for. I'm here for a safe, consistent, predictable profit. Okay, I like 1% per week. Okay, so DraftKings is a no. Let's take a look at John Deere. DE. Now, John Deere is a little out of my price range, but I'll take a look at it anyway because it is a great company. They have been around for quite the while. So, all that being said, something went wrong, stories couldn't be loaded, blah, 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 blah. Alright, I have no idea what to do with that phone. Alright. A year ago, John Deere is at 435.19. The bottom of the year was, what, last week? 339. Last 30 days. Interesting. Okay, so 30 days ago it was at a bottom of 345.94. Shoots up, pulls back. Has our high of the 30-day period was 390.66. Pulls back and we have a new 30-day bottom, which was Monday. Check it out, Monday. Here's Monday right here. Tuesday's up, Wednesday's up, Thursday's up, Friday it was a little bit of a pullback, but we're sitting at 346. Okay, 346. So what is the 346 selling for? The 345s are selling for 11.75. Can that be right? 10.75, 10.75. The stock price is 346. $3.75 divided by 346 comes a grand total of 3%. So if you really like John Deere, you could hypothetically, or I could, hypothetically, buy it first thing Monday morning at 346. Sell up the 345s for 10.75. We're already $1.29 into the money, so it's a higher probability that you're going to be called back out and be back into cash. I mean, that's what we're looking for. I'm not actually buying anything to hold on to it, but I am buying it as if I was going to hold on to it. Is that number right? 57? It is a Friday night, not much happening. We are going to reboot in about a half hour so we can get some more people in here. But if you like it, 345, it's going for 10.75. That's like 3%. That's on YouTube. Okay, this is not a good time to buy dividend stocks. Anything bizarre? No, I'm kind of curious why you would say that. Just curious. I mean, some of these dividend stocks I've been looking at have been in business for over 100 years. I don't see where there's a possibility of them going out of business. So why wouldn't I want to buy it? Now, if the value of my dollar goes down, I'm going to need a hard asset to retain some value. Now, if I'm looking at companies that have been in business for over 100 years and they're not going anywhere, and they consistently increase their dividend payments to their shareholders, which means they're consecutively profitable year after year after year. So if I'm taking a depreciating asset, my cash, which keeps going down, it gets lower and lower in value. So you ask me a question. Does everything go up in value or up in price like inflation, or does the value of our dollar decrease and decrease and decrease? All right, we got 39 people here. This ain't going to work. So we're going to shut down and then we're going to reboot. So guys, don't go anywhere and we'll be right back. So for you other guys that's still here, still hanging out, great. Well, we're shutting down. Come on. We're just going to reboot 28. What, are you shitting me? Really? Why isn't this thing turning off? There it goes. Let's try this again. 3, 2, 1, and we're off. Hypothetically speaking. Ooh, we got some internet problems because now it's just buffering. Oh, that's interesting. So while that's buffering, let's talk to you guys. Now, I don't know what's going on over here. Maria Sapp, like my page. Okay. Jolly good. Alright, so getting ready to get started again. What would that be? That would be something to the effect of, well, while that's loading up, we'll do this. Alright, so if you like John Deere, alright, we're done and over with John Deere. Let's move on to something else. Next on our list. What is next on our list? Ciao. Yep, all these people saying hi to. Alright, look at that. Real estate flippers here. XOP. I'm not quite sure what the heck XOP is. So let's take a quick gander at XOP. XOP. Really? An ETF? That's going to be a no. Yeah, I don't like XOP. It's an ETF, 136. So what is XOP actually paying? Okay, we got dividends all over the place. Let's go back a little bit. Alright, well, it's got dividends all the way back into 2006. Not quite 20 years, but you got 18 years. Okay, so 18 years. Look, it goes from 3 to 13 to 9 to 13 to 8 to 13 to 12 to 22, 25, 33, 24, 29, 30, 11, 22, 17, 29, 130, 15, 69, 79, 48, 34, 67, 83, 73, 57, 34, 29, 24, 26. Yeah, this thing's all over the place. I'm going to say no to this thing right from the top. Okay, it just doesn't make any sense to me. Okay? Well, let's see how that works. Okay, so XOP is going to be a big fat no. Ooh, you guys are going to like this one. Energy Transfer. Freezing bad. Is it really? Well, I don't know what to tell you. We're here in St. Petersburg. Hey, Jay Flipper, what's happening? Okay, so we're going to take a look at ET, Energy Transfer. 1566. So you got a bid of 1570, ask of 1571. Did you check that out? Both the bid and the ask are both higher than the last traded price. Well, that's cool. Alex, how's it going? That gave from freezing really bad. Never seen it this bad. Man, I was swearing buckshot. I sold 4 contracts of POC that expired barely out of the money. POC. What the heck is POC? Piece of crap? That's what you bought? POC. Alright, looking at Energy Transfer. So let's stay on target. Stay on task. Right now, I'm going to take a quick look at Energy Transfer. That's ticker symbol ET. Okay, the bid is 1570. The ask is 1571. If I was going to buy it for that, sell the covered call. The 1550 is going for 27. Not quite there. Neither is the 16. So this is going to be a no, only because the numbers just aren't working in our favor. If I'm buying it for 1571, the closest strike price is going to be the 16. The 16 is right here, but it's only going for 5 cents a share. It's not really worth the effort of doing a covered call on Energy Transfer, at least not this week. Sometimes it's better, but this time it's going to be a no. So as much as you like Energy Transfer, I'm going to have to say no to that one. But look where it was. A year ago, $12.93, bottomed out at $12.45. The top was a couple of weeks ago, and that was $16.49. But where it is, sorry, it's a no today. Next. Oops, come on. There we go. Alright, so no to Energy Transfer. Shop, SOHP. I can tell that's a no right at the top. Can't watch too much freezing. Sorry, dude, still freezing, huh? Nothing I can do about that. Because I'm still in the exact, I'm recording from the exact same place I recorded yesterday, the day before, the day before, the day before. So it's not anything here, more than likely. What we're going to change to? Yeah, shop is going to be a no. Let's take a look at Merck. Now you guys want to look at Shopify. Shopify hasn't been in business long enough to have any halfway decent dividends. Okay, so the length of time of them being in business just doesn't make it. So that being said, let's take a look at Merck, because Merck has been around for a while. MRK. So we're taking a look at Merck now. MRK. The bid is $113.90. The ask is $115. Well, the 115s are going for $107 to $114. You might be able to get your 1% out of that, but let's take a look at the chart. Here's the high up here at 134. That's back in end of June. Bottomed out in October, 99.14. Well, last year at this time she was 106. Now she's at 114. I'm looking for 5 things when I look at a chart. Where's the high? Where's the low? Where was it? Where is it? In which direction is it going? That's the 5 things I want to see when I look at any chart. But once I go from there, I want to break it down to the last 30 days. Because the last 30 days are going to be the most important to me. Well, look what happened. Up, down, 30 days ago, and 3 days ago was our bottom. So when we have a bottom 3 days ago, okay, we got our 30-day bottom 3 days ago, 2 days to the upside. Our 30-day top is at 130. Now we're sitting at 114. That's still $16 off. Now $16 on a $114 stock, well, that's over 10%. Well, of course it's going to go up. Well, what else is it going to do? It goes down, it goes up. It goes down, it goes up. That's about all it does. It goes up, it goes down. It goes up, it goes down. So if you're getting at the right opportunity, your 30-day bottom, and you jump in after your 2 days to the upside. Well, I like 2 days to the upside because you can't get any lower than the bottom. And at the moment, it is at the 30-day bottom 3 days ago. So that's a good opportunity to jump in. And if I did jump in, the 115s, well, I can get about 1%. And that's what I'm looking for. Safe, predictable, consistent 1% per week. Just barely makes it. But let's take a quick look at the seasonality to see how this stock normally reacts this time of year. Now, normally, Normally the stock just goes straight. Look at that. January 1st, way over here to the left. December 31st, over here all the way to the right. This red line represents 10 years worth of average movement. That's just the average movement. And that's what it's been doing for the last 10 years. So if it's doing the same thing for the last 10 years, more than likely it's going to continue doing the same thing over and over again. Now the blue line represents the movement for this current moment, this current time. So the blue dot right here is actually today. So if I want to see what it usually does this time of year, I'm going to click on this and drag it to the right, and that's going to highlight the next couple of weeks. Okay, right there, click, drag it to the right. As soon as she lights up, that's about 2 weeks. Okay, this is what Merck's going to do for the next 2 weeks. Okay, looks like she's going to go a little bit to the upside and then level off. Well, I like that idea. I like Merck. We'll have to figure that one out. Got camera number 7 going. I'm not quite sure because I can't get online. Alright, so that's Merck. I like Merck. Merck's a good thing. I'm going to write Merck down for next week, because that's an ample opportunity right there. MRK. Okay, that is definitely a buy signal. Okay, 30-day top, 30 days ago, 30-day bottom, 3 days ago, 2 days to the upside. Yeah, where else do you think it's going to go? Geraldo, the live is glitchy really bad. Again, nothing I can do about that. Now we're back down to 68 people again. So, shall we try it one more time? Third time's the charm? Alright, third time's the charm. I'm going to close down one more time and then reboot and see what happens. And now, be back in a couple seconds. Come on. So, let's give it a try this time. Let's get ready to rumble. There we go. Huh, interesting. Nope, and it's not on there. Damn it. I can't use that one. Can't use that one. We're notifying viewers that you're live, and here we go. They're filing on in. Keep going. We're letting everybody know that you're here. Jack. Alright, so let's see if it actually works better this time. Sheila, is it working better this time? I don't know. Well, let's find out. Alright, that being said, let's move on to the next one. Mark, I wrote it down. Next on our list, LRMR. What the heck is LRMR? I never heard of LRMR. LRMR. Larimar Therapeutics. Yeah, that's a monthly, and that's going to be a no right from the get-go. I don't do monthlies. They just don't pay the same. It's just not worth it. Guppy Face. NL05. Chippers Seafood and Southern. How are you guys doing this evening? Mary Divine Centris. Okay. Angel, how you doing? Gina, how you doing? Scott, Andy, Gregory, welcome, welcome, welcome to the show. All right. CNP. What the heck is CNP? No, Julie. No. Or Julie, what are we saying no to? It's not any better? All right. CNP. Is that what it was? CNR. CNP. What is CNP? Centerpoint Energy. That's a no. TikTok is still bad. Damn it. Honestly, sorry guys, I honestly don't know what to tell you. I haven't had any issues with it all year. Now we are having an issue. So, it is what it is. It's still glitchy on TikTok. YouTube is okay. Alright, it's still glitchy. So you guys do know that you can go to YouTube, you can go to Instagram, and you can go to Facebook. So one of those. Now I haven't got Rumble figured out yet, and I haven't got what's that other one? LinkedIn. Haven't got that one figured out yet either, but I'm working on it. Alright, so CNP is going to be a no. TM. What the heck is TM? Toyota Motor Company. Yeah, that's definitely a no. Two reasons. One, it's a monthly. Two, look at all the space between the trades, between each day. There's a lot of gapping up and a lot of gapping down. Look at that. Okay? Gap up, gap up, gap up, gap up, gap up, gap down, gap up, gap down, gap down. Yeah, no thank you. That's just, you gotta be kidding me. Really? 275,000 shares, that's all that traded? Toyota Motor Company, 274,000 shares. That's not a whole heck of a lot. Alright, so TM is going to be in now, Toyota Motor Company. MULN. What the heck is MULN? Let's try it again. MULN. Mullen Automotive. Yeah, you gotta be kidding me. 59 cents a share? Seriously? How's that crap? Alright, this one I do know. This one you're gonna like. Walgreens, WBA. It's on the list. Okay, a year ago, Walgreens is at $29.85. She drops to the bottom of the year. It looks like today and Monday. Looks that way. Last 30 days, right here we go. Okay, so here's the last 30 days. Actually, that looks rather nice, in my humble opinion. 30 days ago, we're here. She shoots up, pulls back. Shoots up, pulls back. 30-day bottom was right there on Monday. Tuesday, Wednesday are up. Thursday and Friday are a little on the downside. So I'm not 100% sure how you feel about that, but I like Walgreens. You know, Walgreens has always been very fair to me. Okay? WBA, Walgreens, look at the last 30 days. Again, 30 days ago, she shoots up, pulls back, shoots up, pulls back, our 30-day bottom. Monday, Tuesday, Wednesday go to the upside, Thursday's up, Friday is a little bit of a pullback. That's about it. Other than that, I like Walgreens. Walgreens is very nice to me. The last trade, 1068. The bid, 1069. The ask, 1071. Did you notice both the bid and the ask are higher than the last traded price? Well, when that usually happens, the market maker has a tendency to want to push it up on Monday. Well, great. That works for me. But at 1071, the 11 is going for 12 bucks. Sorry, 12 cents. Well, it's $12 per contract, but 12 cents per share. So at the 12, and I'm buying it for 11, well, that is over 1%. And I actually like over 1%. Because over 1% makes it easier for me to make a profit. And I like 1% per week. That's my main goal. Alright, all that being said, here we go. Next one, we're looking for WBA. What does Walgreens usually do this time of year? Figure that out. Well, here we are. This time of year, Walgreens looks as if she's going to go down just a little bit for about, until the end of the month. And then after that, she should go back up again. Now that's based on 10 years of history, how it normally does on a daily basis, year after year after year. Now they're taking charts from 2014, 2015, 2016, 17, 18, 19, all the way up to 2024. The last 10 years of charts right there, that red line. Okay, so that's how it usually moves. So normal business is normal business. Well, it should just go flat for the next couple of weeks. All right, so what are we looking at next? Next, ExxonMobil. All right, I like ExxonMobil. Still glitchy. Oops. CPB. Is that Campbell Soup? CPB? I don't know. CPB. I was right. Campbell Soup. Cool beans. All right. Even though I like Campbell Soup, it's going to be a no. The reason why, or I should say, not this week. Okay. Let's do a video on Campbell Soup. Why not? All right, we're looking at Campbell Soup right now, which is CPB. Charlie, Penguin, Bravo. I don't know, what else? CPB. So at this moment in time, 48.78 is the bid, 49.25 is the ask, and if I'm going to buy it at 49.25, well, the 49s are going for 60 cents, not quite 1%. The 50s are going for 20 cents, not quite 1% either. So this is a tough question. Campbell Soup, well, we all know who they are. Well, let's take a look at the chart. All right, it's basically going to be a no this week. Look at the last 30 days. The last 30 days, 30 days ago, we're at 45. Bottomed out somewhere around 44, whatever it is. What was it? 44.81. Okay, so the bottom is 44.81. The top is at 50.50. It's a little too close to the high for me. So that's going to be a no. Sorry. Now, I like Campbell Soup. I do. I have bought them in the past. But if we're really wanting to make money in the stock market, you got to buy it low and sell it high. Well, the low is down here, and that was 30 days ago. So if you want to do with Campbell Soup, I would wait until it dropped back down to find a new 30-day bottom before thinking of getting back into it. But that's just my humble opinion. We all know James doesn't know anything, so your best bet is doing some research and finding out what works for you, because we're all different. You know, I like certain stocks because they perform a certain way consistently. So I'm looking for a consistent, safe, and predictable return. And the only way I'm going to be doing that, well, is a strategy I came up with. It's simple, it's safe, why not? Okay. That being said, let's move on to the next one. So it's known as Campbell's ETC. What the heck is ETC? ETC, etc., etc., etc. ECA Marcellus Trust. Yeah. ECT's a no. But ETC, Environmental Tectonics. Yeah, no. Doesn't have any dividends at all. I mean, it doesn't have any premiums or options. It has no options. So how can we do an option call on it if it has no options? Now, I really don't want to do this one. O Realty. Okay, somebody asked me to take a look at it. I'm assuming they're not here tonight because O Realty is a no. And the reason why O Realty is a no, two reasons right off the top of my head. Reason number one, 30-day high. Yeah, no thank you. Reason number two, it is a monthly optionable stock, which means I can only do a covered call once per month. And once per month doesn't work for me. The reason why it doesn't work for me is I can only do it 12 times a year. 12 times a year will get me what? 12 to 24%? If you're okay with 24%. But I don't like monthlies because it's really hard to judge where it's going next. Alright. O is an O. What's the conversation? Rothschild, the conversation is dividend capturing with covered calls on dividend stocks that have consistently increased their payments to the shareholders for more than 20 consecutive years for a safe, predictable, and consistent 1% per week. That's my goal. My goal is 1% per week, safely and predictably. I gotta put my lipstick on. Chapstick. Next on the list, ADM. Isn't that Archer Daniels? ADM? It is Archer Daniels. For 50 years, they've been increasing their dividends. Dividend king. How can you go wrong with ADM? Well, ADM, first thing I always want to see is where's the high for the chart, where's the high of the year, where's the low, where was it, where is it, in which direction is it going? Well, everything looks fine there, so let's move on to next. Next thing we're looking at is going to be, what am I buying it for? So Monday morning, if I'm going to buy it, I'm going to be buying it for $58.50. Okay, the $58.50, the closest one is going to be the 59, and that's 30 cents. That's going to be no. Sorry. And if I look at the 58s, well, the 58s, I'll be losing 50 cents right off the top, which means I'm only bringing 50 cents. Again, that's not 1%. So as much as I like Archer Daniels, the numbers just aren't working tonight. You know, it is what it is. Now, you guys haven't suggested anything all night. Hey, let's invite Calvin Hill. Calvin Hill, I sent you an invite. Come on down, let's chat. We've had a chat before, Calvin. On your channel. This time it's my channel, so let's see what happens. Alright. Ooh, here's another good one. 100-year-old company. Dividend king. CLX. Clorox. Okay, we all know who Clorox is. They've been around for over 100 years. CLX, Clorox. Let's take a quick gander at it. First thing I always want to look at, where's the high? Where's the low? Where was it? Where is it? And what direction is it going? Well, that looks fine. Next, I want to jump in and take a look at what do the numbers look like. Well, if I'm buying it Monday morning, 143.46, I'm looking at the 144s. And the 144s are going for 60 cents a share. That's not even 0.5%. That is a big fat no. Now you're going to find that companies that are over 100 years old, they don't need to have the high premiums because they have longevity on their side. Okay, they've been increasing their dividends for over 5 decades. They don't really need to attract buyers and sellers by giving them big premiums. Sorry, it's just not what they need to do. Wade, yes, I've rebooted 4 times. Okay, so it's just not working. So, you know what they say, you can't have it perfect every time. Not today. Not today, you're right about that one. Alright, next on the list. Now, I like Clorox, I do. I think I may have bought them once or twice. Because, like I said, the company's over 100 years old. They've been increasing their dividends for over 5 decades. They don't really need to attract any buyers. Okay? So if you're not needing to attract any buyers, well, don't give out good dividend or good premiums. Next on the list, and this is, oh, wait a minute. Well, my list is gone. I have exhausted the list in which you guys gave me. So let's take a look at the circled list that we collected over the week. First on the list is going to be Mara, M-A-R-A, because we all like Mara, Marathon, M-A-R-A. Okay. Marathon, M-A-R-A. Always, first thing I want to look at, the high, the low, where was it, where is it, what direction is it going? Lovely. Now let's take a look at the numbers. What am I buying it for first thing Monday morning? 1701. The 17s are going for 82. Can that be right? That is a nice fat premium. And as a matter of fact, we actually have it written down in double circled, so that tells you something. So at 17, the 17 is going for 82 cents. So what does that come to? Clear that. 82 cents. I'm going to divide it by the purchase price, 17. That's going to give us a return of 4.8% for the week. So what has to happen with the stock in order to get 4.8% for the week? Well, currently it's at 1703. If I buy it at 1701, which is the current price, and sell the 17s, I'm selling someone the rights to buy it from me at $17. Now I'm going to receive for that privilege 82 cents per share, and that just so happens to be over 4%. Well, if I'm looking to get a safe, predictable 1% and they're offering me 4%, well, that's going to be a yes. Why not? And it's a company that we've been following along all this time. Recon, you want to do yo? Or are you just saying, yo, I'm here? I don't know which one it is. But let's, for the fun of it, take out YO. Clear secure. Are you kidding me? Yeah, that's going to be a no. I'm pretty sure you're just saying hi, because that's the way I want to interpret it. Because YO Recon, you've been here long enough to know that I don't like stuff like that. It's got to at least have 20 years of increased dividends, and then have halfway different decent premiums, and that is non-existent. All right. That being said, Cheryl Big, how are you doing over there in Facebook world? Hope everything's going well for you. Next on my list is going to be WMD. What the heck is WMD? No, WMT. Walmart. WMT. Wally World. So let's take a look at Walmart. WMT. Okay, the high is here, 71.38. The bottom is at 49.80. A year ago, we're at 53.75, and now we're at 67. Nice movement. Look at the nice movement going up. Now, if I want to jump into this, what am I looking at? Well, first off, I get it's logging a lot. I'm going to buy it at 68. 68s are going for 170. That's 2%. If you're looking to make money in the stock market, 2% a week is not bad. That's over 100% a year at 2% per week. Now, that being said, let's take a look. Last 30 days, here we go. 30 days ago, 69, tops off at 71.33, drops down to 67. We got 1 day to the upside. That's like an invitation to jump on in. Okay, I personally like 2 days to the upside. Secretary, sorry to say your connection is just about unbearable tonight. Maybe it's the placement of your phone for TikTok. It normally is positioned differently, I think. Well, Sheila, believe it or not, I'm standing here in front of my big screen TV, computer hooked up, the exact same setup I've been having for months upon months. I've got my phones here on the line. The only thing I'm thinking of, if I shut off my Wi-Fi to my phone, I don't know. It is what it is. We could call it quits early. Geraldo, you want to take a look at NEE? N-E-E. Well, let's finish up with Walmart first. Okay, finish up with Walmart. Walmart's giving a nice premium. That's over 2%. I'm actually going to write that down for next week because I like the numbers. WMT, Walmart. Alright, so that's for next week. I like that one. So we'll take a look at NEE in a little bit. We're at 49. If we keep dropping, I'm gonna call it a night. It's a Friday night. Not a whole heck of a lot of people show up on a Friday night. So I like Walmart. You get 2 days to the upside after a 30, and 1 day to the upside after a 30-day bottom. What's going to happen on Monday? We're going to take a look on Monday to see if it's a good opportunity to jump in. Manny, I don't know if it's just me, but you're lagging badly tonight. Yep, I saw that. Mandy, how are you doing over there on Instagram? There is, if TikTok is really that bad, there is YouTube, there is Facebook, there is Instagram. I'll be working on some, some different platforms, because if TikTok is going to be glitchy, you can move over to YouTube, because I'm not getting anything from YouTube. All right. NEE. Let's take a gander. NEE. Nextera Energy. Alright, so what I'm going to do is I am going to, you got to be kidding me, 30? Let's shut this off for a second. Hold on, don't go anywhere. Alright, so I just shut off. Yeah, I saw it frozen. I froze it for a second. I just shut off my Wi-Fi, or my hotspot, on the computer. So maybe that will do it. I don't know. So let's give it a try. All right, we're looking at NextEra Energy, NEE. NextEra Energy, NEE. Always, always, always. High, low, where was it, where is it, what direction is it going? Great, 77, 73. The closest strike price is going to be the 78. The 78 is going for 89 cents. That is well over 1%. I like over 1%. Let's take a look. A year ago, 68.85. Bottoms out for the year, 47. Got a double top at 80.63. All right, last 30 days. Last 30 days is telling me to hold on a minute and just hold back. 30 days ago, 72, jumps up 76, drops back down to 71, shoots up to 81. Now she's sitting at 77. She's coming to the downside. So that's going to be hold off. We'll see what it looks like next week. So 2 weeks. We'll put NEE out in 2 weeks. Take a look at it then. Funny thing is, it's already written on there for 2 weeks. So it's already written down. I think it's fixed. I can fix it. Sheila, I actually had the hotspot on this phone for that phone to work. So by using the hotspot, it kind of used up some data, messing it up. But anyway, we're only at 22 people. You got to like, share, comment, all that kind of nice, neat, fun stuff. Holy Charlie. All right. We're at 10 o'clock, so let's keep on rolling. All right. That being said, what is next? All right. Next, so what does NEE normally do this time of year? Yeah. Okay, so for the next couple of weeks, we want the stock price to drop down a little bit. Okay, see where it is right now? It's at 77.46. 30-day highs there, 30-day bottoms there. Well, from the 30-day bottom, 70 to 80, that's 10 bucks. That's over 10%. Of course, it's going to be profit taking. That profit taking should take us down to 74, 73, 74, hypothetically speaking, in a week or two. David Spade, do you think SPWR has potential to bounce back to at least $2? Well, SPWR. SPWR. SunPower Corporation. It's at 21 cents. And you really want me to take a look and see if it might jump back to 2? Well, number one, I have no idea what the company does. Okay? She's at a 30-day bottom now. Then she dropped down to here. She's at 20 cents. And you want it to go back up to there? Well, there's that possibility. Okay, I really don't know the company. I don't pay attention to it. It doesn't have anything to do with me, because I'm pretty sure they don't have 20 years of increased dividends to make it appealing to me. Now, when you're investing, you can invest in anything you want. Okay, Recon, we just looked at Campbell Soup a little while ago. Okay, CPB, Campbell Soup, we already looked at that one. So SPWR, it's not even in the same ball game. Okay, so I'm here at the ball game at the 50-yard line, and you're out in the parking lot. Something just ain't copacetic here. Hey, don't worry about it, Recon. Shoot me up with something else that you like. All right, so SPWR, no, sorry. All right, Walmart with that. UPS. UPS. Okay. Take a quick look at UPS. Always first thing, the high, low, where was it, where is it, what direction is it going? I want to take a closer look at this right here, because this is where we are right now. But look at the numbers. If I'm buying it Monday, 125.66, 125.99. The 126 is what I'm looking for. 150. There's your 1%. UPS. We all know who UPS is. So if that's working out, all right. I'm glad it's much better there, Julie. Wave Runner, LNC. How's everyone doing? All right. LNC. What the heck is LNC? I don't think I remember that. Alright, that being said, UPS 125.99 to 126 is great. A year ago it was the top of the year, 182.63. Bottom of the year was yesterday. If you're going to buy low and sell high, well, this is the low of the year for UPS. I'm not talking about Susie Seashells or Sam Sandals or, Tony's Tree Trunks. No. I'm talking UPS. Okay, you see those brown trucks all over the place. UPS is huge. They're not going anywhere. We're going to cut it short tonight. 38 people and glitchy. Yeah, not a huge scenario going on tonight. It is a Friday night. I understand people want to get out, shake off the work week, and just go from there. So let's continue on and see what we got. So that's UPS, my humble opinion. And that's all it is a humble opinion. 30 days ago we're at 134, shoots on up to 148. Big drop. I love a big drop like this, especially with a company like that, UPS. We have our 30-day bottom yesterday. Well, yeah, that gap is going to fill at some point in time, and I want to be there to take care of it, to take advantage of it. So I'm going to write UPS for next week. UPS. Awesome. I like it. Next on the list, AA. Isn't that Alcoa? AA. It is Alcoa. Imagine that. Alcoa, AA. Again, first thing, high, low. Where was it? Where is it? Where's it going? That's the first thing I always want to see before I even look at the numbers. Now the number's going to tell me if it's a good deal or not. But the chart is telling me if it's the right time. So good deal, numbers. The right time, chart. Okay? Numbers. $30.60. The closest one's going to be the 30.50 at 79. Well, that's over 2%. Well, hell yeah. Now, I'm just wondering on the chart. Is the chart telling me it's the right time? A year ago, 33.89, bottomed out in October at 23.31, topped off at 45.43 in the end of May. But look at this right here. Last 30 days. 30-day top, 30 days ago. 30-day bottom, Monday, 4 days ago. That baby's going to go to the upside. Just all there is to it. So you know what that means? That means I'm writing Alcoa down for next week. Okay, 2 reasons. Reason number 1, look at that up climb right there. From where it is now, 31, what is it at? 30.56. Look where the high is, 40. That's $10 away. I don't see this thing jumping up $10 in 1 week. Yeah, so I'd like to jump in onto this one. Alright, at the 30.50 and get 79 cents. That's 2%. I like the idea of 2%. And Alcoa has been around for decades. Next on the list. Now, do I have Alcoa written down for next week? Yes, I do. Next on our list, Disney. D-I-S. Disney. D-I-S. Interesting. Take a quick gander at Disney. Look at the high right there in April. Bottomed out over here in October. A year ago we were at 90. Now we're at 86. Where did all that run up go? It went up, it went down, it disappeared. That's why I say don't marry a stock. It's not gonna love you back. Seriously. They go up, they go down. That's all they do. They do not love you back. But let's take a look at the numbers. 86.18. The closest one can be the 86. That's $1.26. That is over 1%, and I like over 1%. As a matter of fact, 89 last year, bottomed out at 78, topped out at 124. Here's where we are right now. Last 30 days. Check it out. Last 30 days. 30-day high way over there. 30-day bottom here. Going to the upside. That's a yes. I like that. You can't ask for better than what we're seeing right now. That's what I'm looking for. It's a good quality company. You got to find the bottom somewhere. Here's the bottom right here. Yesterday. Now, is that the solid bottom? No, it's not. It's just a potential bottom. Okay, which means today was up. So it's only one day to the upside. Now, if we have another day to the upside Monday, well, that's an excellent position to be in. Because we're going to make our money in the stock market buying low and selling high. And if 30 days ago, she's at 99, and now she's at 84, okay, that's a $16 difference. $16 on an $80 stock, that's almost 20%. Almost. So think about it. It's 20% lower than it was 3 weeks ago. Okay? 1 week, 2 weeks, 3 weeks. 3 weeks ago, it was 20% higher. So yeah, she drops down here, all that profit taking, and we have, well, that gap already filled. Don't worry about that one. We got a gap right here, but it's not that big. So I like that one. I like Disney. As a matter of fact, we're going to write Disney down for next week also. And it's already written down for next week. I'm just going to circle it. Imagine that. And Walmart's already written down for next week. I find that rather enlightening. Alright, next on the list. Let's keep the ball rolling. And that was Disney. Ooh, you guys are going to like this one. On the list next, we got this from last week. Apple, AAPL. Now, of course, we have to do a video on Apple. It's just silly that if we don't. Apple, AAPL. First thing, as always, the high, the low. Where was it? Where is it? What direction is it going? Great, wonderful. What's the current price? 216.45. So the 217 is going for 228. Well, that's over 1%. Okay, it's a household brand name. Everybody knows who Disney is. Disney, Mickey Mouse, all that kind of nice, fun stuff. A year ago, 179. Bottomed out in April at 164. Topped off in the middle of July at 236. Look at that big drop. Big drop. Okay, here we are right there. 30-day bottom right there, 196. 1, 2, 3, 4 days to the upside, and we still have plenty of space to go to keep going higher. So I like Disney. The numbers are all working, and the chart's telling me the same thing. Next on the list, AAL, American Airlines. Who just signed in? Who's here now? MNA Graphic. Hey, alrighty then. Tier Beer 181. Apple, yep. We just looked at Apple. Disney is garbage. Oh, Pete, terribly sorry about that. But Disney, they've been around for a while. Yeah, maybe they're having some issues lately, but you can't neglect Disney from the 60s, 70s, and 80s. Okay, it's not till just recently that they're having some issues. This new weird agenda. Don't even get me started on that. I get it. You get it, Pete? So, I don't do politics. Okay, if it's a good stock, the numbers look right, and you can't beat the name recognition. Can you explain how to trade options? Ooh, Mitchell DeAngelis. You got to be new here, dude. Seriously. Okay, you want to know how to trade options? Well, here we go. Now, there's a big difference between a stock and an option. Okay? Stock is ownership in the company. So if I buy some of Apple right here for 216, I'll actually own a portion of Apple. And by owning a portion of Apple, I am entitled to a portion of their profits. And that is through a dividend. Okay, so where do options come in? Options are kind of like, oh, that's a tough one. How do you actually explain it? It's the right but not the obligation to buy a stock at a certain time by a certain date, and you have to pay for that. Can you explain how options? Yeah. It looks like Disney could be taking some profit. All right, hold on a second. Okay, so if you look at the high from Disney, that's Apple. Hold on a second. Let's go to Disney to address that question. Okay, so think about it. If Disney was at weight 124 back in April, now she's down to 85. That's a big drop. Now, is that a drop or is that people taking profits? I don't know. I can't answer that question. DeAngelis, use Google or YouTube, search the right covered calls. Yep. Remy, can we look at Disney? Yes, we already did. I made 21% off Spider calls this week. Cool beans, Queenies. On the daily, cool beans. Can you explain the concept that the gap on candlestick charts to fill? Well, Dennis, hola, hola, ¿qué pasa, amigo? ¿Cómo está? All right, the concept of gaps filling, I'm not quite sure what you mean by that. It's the pricing, if the stock is here at 94, and the very next day she opens up at 91, it creates a gap. Okay, so from 94 to 91, there was no 92, no 93, so they call it a gap. So when that happens, it has a tendency to fill, which means she drops, turns around, and it filled it rather quickly. It went back up, it filled the gap, then it continued to the downside because it was in a downturn. All right, and for some strange reason, she gapped down. People took advantage of the gap, jumped on in, and then she proceeded to continue to the downside. Remy, on Sunday, Spider, I have no idea. SCHD, oh, please don't start with SCHD. Okay, that's a turd and a half, and I really don't want to get into a turd and a half, especially on a Friday. Because it means I got to go through the whole weekend, ending off with a turd and a half. Sorry, I just don't like CHAD. What about blue chip trading? What are your thoughts on that? Well, TC, that's what we're doing. Uh-oh, I forgot to flip the camera. Sorry. Sorry. Come on. Wow. What is happening here? There it goes. Alright. Starbucks. We'll take a look at Starbucks. Alright, TC, blue chip stocks. Now, when you're talking about blue chip stocks, let me just give you a quick look at what I'm looking at. Okay. Now, when you're talking about blue chip stocks, are you talking about companies such as Chevron, UPS, Johnson & Johnson, KeyBank, Walgreens, Aflac, Archer Daniels, Target, Baxter, eBay, GLW, Corning, KHC, Heinz Kraft, NEE, Nextera Energy, Starbucks, Walmart, Hershey's? You mean companies like that? Those are the only ones I do. I make sure the companies that I do have consistently increased their dividends for 2 decades, 20 consecutive years. Well, increased dividends basically means it's a shortcut. It's kind of cheating. I don't want to read the annual reports. I don't want to read the quarterly reports. I really honestly don't care about that information. My main concern is how consistently are they being profitable? Now, if they are profitable, okay, they allocate the profits in a certain manner. X amount goes here, X amount goes here, X amount goes here, and X amount goes towards the investors. Okay, that's you and me. When we buy and sell stocks, we become the investors, the shareholders. So if our cut gets higher and higher and higher every single year, well, let's cut out the fluff and just call it they're more profitable every year. So if they're giving me more money every year, that means they must be profitable every single year. That just makes sense. Right? If you're investing your money, you can put your money anywhere you want. I don't ever tell people what to do. I don't. I don't make recommendations. I just tell you what I do. And I personally do not want to put my money in companies that are not consistently profitable. Now, I like 20 years of increased dividends. Well, that means they're profitable for at least a minimum of 20 years. All right? So if they're profitable for at least 20 years, well, alrighty then. There's about 300 companies that are profitable for at least 20 consecutive years and have weekly options. Why do I want weekly options? Weekly options allows me weekly cash flow. Now, if I don't have options, well, I'm not guaranteed a weekly cash flow. Monthly optionable stocks, still not the same. The numbers just don't work. Now, if you take a look at it, the stock market, okay, there's 9,598. We actually checked 2 days ago. We checked and see how many companies are available in the stock market. 9,598 as of this week. Okay, it changes every week. More companies come in, some drop out, whatever. But that being said, if you have that many choices to pick from on a daily basis, how do you know which ones to pick? Seriously, there's a lot to choose from. So I only look at about 300, and those 300 companies: Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. You can go to Google you can go to Google and put into the search Dividend Kings List 2024. It will give you the list of all the Dividend Kings, and those are all the companies that have consistently increased their dividends. So it's a Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then you get Warren Buffett's list. Right into Google, Bing, whatever search engine you use. Warren Buffett Stock List 2024. And it will give you every single stock that Warren Buffett holds. It's kind of cheating, because if it's good enough for Warren, it's good enough for me. And if I'm looking at companies like Target, Walgreens, Aflac, Archer Daniels, Clorox, Ford, Intel, British Petroleum, IBM, Visa, Series, Wells Fargo, some of these companies are over 100 years old, and they're still paying out dividends. You know what they've seen in the last 100 years here in the United States? World War I, World War II, Korea, Vietnam, the stock market crash, the Great Depression, the oil embargo of the 70s, the crash of 87. I don't know if you guys remember that. There was a crash in 87. There was a crash in 2000 with the Y2K crap. And then you had 08 with a financial crap. And then you had the pandemic in 21. And then you had the Gulf Wars, Iraq, Iran, Afghanistan, all that crap. And yet these companies are still increasing their dividends to their shareholders every single year. So why aren't these companies on your list? Why are you not investing in a good, solid company that has historical proven record? Okay, Disney has been around for almost 100 years. Yeah, they're having a little issues with this, whatever you call this atmosphere that we're in now. But the 60s and 70s, where I grew up with Disney, we watched Disney every Sunday night because they always had a new movie on every Sunday. And we'd go to the movies, the actual drive-in theater, and to watch Disney new releases. It was awesome growing up in the 60s and 70s. Okay? But here's the thing. Now they get this weird shit, and they're forgetting who their audience is. The audience is not the children. The audience is the parents. You got to appeal to the parents, not to the children. Anyway, besides the point. Let's get away from the politics thing, and let's go on to our next stock. Riley. Somebody wants to take a look at Riley, R-R-L-Y. Uh-oh. Riley, R-I-L-Y. There we go. 16. Now, is there a reason why I don't like Riley? I'm pretty sure there is. So let's go to Yahoo Finance and put in Riley, R-I-L-Y. You see what kind of dividends they pay out. Okay, we want to see all the dividends they paid out. Now, Riley has only been paying dividends for the past 10 years. And they only pay out, is that right? 14 was once. 15 was twice, 16 was twice, 17, 4 times 18. Okay, so they haven't been paying that long, okay, about 10 years. But look at the dividends. 13, 12, 16, 12, 30, 16, 8, 26, 50, 65, 35, 25, 38, 350, 3, 2, 4, 1, 1, 1, 50. They can keep dropping. There's no consistencies there. Now think about it clearly. You're about to take some of the money that you worked for. Okay, so we have this thing here in the United States. You go to school, you get a good job. Well, you go to school, go to college, get a good job, work 30, 40 years of your life, take all that money you made and put it into something that's going to give you a return on your money. Alrighty then. Now, we just said a couple of minutes ago, there's over 9,598 companies to choose from. Why the hell are you picking something like this? Just take a look at the dividends in the last 4 years. Okay, in 2021, it was $3.50 a share. Whoa, that's a nice premium. That's a nice dividend. Then they dropped it to $3. Then they dropped it to $2. Then they doubled it to $4. Now they cut it by 75% in 2022, so now it's only $1. Okay, wait a second. 2023 it's $1. 2024 they cut it in half yet again. So what is that telling me? Well, that tells me they're making less profits. Why the hell would I put my money into a company that makes less and less money every year? Isn't that counterproductive? Aren't we supposed to be putting our money into something that continuously grows? Now, there's 9,598 companies. Why the hell would you pick this one? Seriously, think about it. It's your money. Nobody has more interest in your money. Apparently, the people that work here don't, because no matter what you can say about the people that work there, the dividends are getting smaller. If the dividends are getting smaller, that means their profits are getting smaller. Well, if their profits are getting smaller, then somebody's not doing something right. So for me, that's a no. Sorry, Riley's a no. Because if they're going backwards with the dividends, I don't want to put my money into a company that's not being profitable. I'm missing some questions. Mark Sherman wants to take a look at Starbuckies. Now, I actually have some Starbucks. SBUX. Alright. Starbuckies. Okay, we're going to take a look at Starbucks real quick. As always, high, low, where was it? Where is it? What direction is it going? I want to take a close look at this because this is where all the action is at this moment in time. Do I really care what it was a year ago? Well, yes and no. Because a year ago doesn't do me any good for this week and the next coming up days. Alright, fine. So, the current price right now, $77.60. The closest one's going to be the 78, and that's going for 16 cents. And I say, hell no to that one, because there's too many other companies that are actually paying better. Now, don't get me wrong, I already own some Starbucks. I do. But I wouldn't buy any more because the numbers just aren't working. Now, when I bought it, the numbers were more favorable. So I'm going to hold on to it, hold on to my position, wait for it to hit the target price that I'm looking for, consistently catch those premiums, because I'm still going to write covered calls against it even as it's dropping. That way I'm getting a consistent cash flow, and that's what I'm looking for. I'm looking for a safe, consistent, predictable, weekly cash flow. TC, you like that? Alrighty. Alright, we're at 86, thank you. CRW does not pay dividends, so we're not even going to bother with that one. Can you look at TDARC? And Tandem. Now, TDARC I can. Tandem, I don't know what the ticker symbol is. Teladoc Incorporated. Well, let's go to Yahoo Finance and see what kind of dividends they pay. Are they even worth our time and effort? No, they are not. There are no dividends in the selected time frame. Well, why, if this is a dividend investing for weekly cash flow page, site, live, or show, whatever you want to call it, I still have no idea what to call this thing. You know, I show up on camera and I just tell you about, what I'm doing, and I have no idea what to call it. But what I do know is certain things attract me as an investor. One of them is dividends, because dividends is a portion of the profits paid to the shareholders. Am I really excited about dividends? No. It's a measuring stick. Okay, it allows me to avoid all the other crap. Okay, and there is a lot of crap when it comes to companies, because apparently somebody's buying this piece of crap. And I only say that because it doesn't fit my parameters. Okay? I'm not looking for long-term play. I'm not looking to buy this at $7.15, hold on to it for 20, 30 years and wait to get for 20, 30 bucks. No, that's not what I'm doing. Hey James, how are you? I own 500 shares of BA on 80 share, blah, 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 blah. All right, I got to read that again because it's way too much information there. All right. Can I use a covered call option system to ease my pain? Actually, you can. Let's take a look at BA and see if we can help ease the pain on this one. Now, BA is Boeing. BA. Now, he said he had Boeing at 180. Okay. First thing I always want to take a look at. Boeing, BA. High, low, where was it? Where is it? What direction it's going? What's going on right here? Because this is the last couple of weeks. I want to take a good look at that, see what's going on. Right now, the current price is 168.30. The closest one is going to be the 167.50, and that's going for 330. Well, that's well over 1%. Okay? Now, the last 30 days ago, we're at 184, shoots up to the high at 197. Now, from 197, she drops down to 162. That's 30 bucks. Of course, this thing's going to drop, profit taking, turn around. Look at 1, 2, 3, 4 days to the upside. Yep, that thing's going to go up to the upside. Just take a look at the numbers. It's a seesaw. It goes up, it goes down. Well, it was high right there, 30-day high. Now it's at a 30-day bottom, and it's giving me over 1%. What else are you asking for? I mean, think about it. What else are you asking for? Now, Tandem, Neil, or is it NBell? I have no idea what Tandem is. Threading the Needle, KHC, Kraft Heinz, KHC. Alright, so KHC, always, high, low, was, is, direction. We know where it's going, we know where it's been. Let's take a look at the numbers. 35.46, the 35.50s are going for 21 cents. Sorry, but that's going to be a no. It's not quite enough for me. I like 1%. There are too many other companies that are offering 1% or more for me to stick with a company not paying 1%. Now, even though Heinz Ketchup or Heinz Kraft has been in business for over 100 years, okay, and they are dividend king, consistently increasing their dividends every year for over 50 years, okay, even all that, it's still not quite 1% for the week. And I have a whole list of companies that will pay me 1%. Okay, threading the needle, how's that? IEP, Icon. We keep looking at Icon and it always comes up the same. The dividends are all over the place. He's not consistently profitable. Okay, let's go take a quick look. Yahoo Finance, IEP. Okay, let's take a look at the dividends. Okay, 2009, 24 cents. 2008, 24 cents. 2010, 2011, 24 cents. 4 years, he didn't increase it at all. Okay, from there, it goes from 24 cents to 10 cents. Explain to me how that is a good deal. So if you're giving your money to a company and they're giving you 24 cents per share, okay, and then they cut your dividends in half, what does that tell you? Well, that tells me that their profits are cut in half. So we're making 100 million this year. Well, now we're only making 50 million. We can only give you 10 cents a share. Yeah, no thanks. Okay, that's 2012. Okay, then it was $1, then it went to $1.20, then it went to $1.50. And it stayed at $1.50 about 4 or 5 years. It jumped to $1.75 for a couple of years. And then 2019 it jumps to $2. And it stays for $2 2019, 20, 21, 22, 23. And now they cut it in half again. So to me, they're not consistently profitable. Why would you put your money in a company that is not consistently profitable? I'm sure the guy doesn't need us to do him a favor. Hey, do me a favor. I'm a little short on cash. Lend me some money so I can get my company going. Great. giving you $2 per share. Well, we didn't make as much money this year, so we're only going to give you $1 per share. Yeah, no thank you. Sorry, doesn't work for me. Hey, Marie? Is that Marie? Marie, interesting way of spelling Marie. Okay, SM Rocky, we already looked at Riley. Riley was already, we looked at that one already. 86, you want to take a look at Key? Key! Isn't that a Warren Buffett stock? Key? K-E-Y. Alrighty, first thing, as always, Key Corporation, K-E-Y. High, low, where was it? Where is it? Where's it going? Look at the high right there. She drops, now she's right here. That looks appetizing. Let's take a quick gander at that. But before we do, let's check the numbers. If I'm buying it 14.75, the 14.50s are going for 31. Well, that's nice. The 15s are going for 9. Not so nice. Okay, 14.75, take 25 off of that, and the 60. Yep, nope. Neither one of them is giving me 1%. Sorry. It's just the numbers just aren't working. As much as you may like Key Bank, okay, bottom's here, top's there. Okay, the chart is telling me one thing. Great. Well, the chart's telling me she's getting ready to go up again. All right, look at the last 30 days. All right, your 30-day high, your 30-day bottom, well, it's going to the upside. Great. But if I jump in and buy it, I'm not getting the money that I want to get. Other companies are giving me more, so why would I jump into a company giving me less? Sorry, Key's going to be no. Sorry, 86. Numbers just not working. Repeat that again slowly. Slowly? Okay. Key Bank is not giving me the money I want. Sorry, dude. The numbers just aren't working. Sorry. 30-day high, way up there. 30-day bottom here. Perfect positioning in the stock chart. Perfect position, in my humble opinion. Okay, I'm not saying this is great for every company, but look, 30 days, this is our 30-day chart. Last week, we're at 1650. Now we're down here to 1360. Okay, that's a $3 drop on a $13 stock, which is about 20%. Okay, 4 days to the upside. Perfect opportunity, but what's missing? What's missing is the money part. If I'm buying it at 14.75, the 50s are only 9 cents. That's not worth it. Okay? And the 14.50s are going for 31. But I'm losing 25 right off the top. And if you take 25 off that 31, well, you're walking away with 6 cents. 6 cents on a $15 stock? Yeah, no thank you. Sorry, numbers just don't work. Stanley! People are using your identity to scam. Yep, Stanley, they are. Last time we counted, there was 27 scammers that are pretending to be me. So when I tell people, if you like the content, if you really want to talk to me, send me your phone number right here. Go up to my bio, right up over here on the left. Click on that. You can send me your phone number, and I will give you a call. I do. I call at least 2 or 3 people every single day. You'd think it would be more. Because on an average night, a couple of thousand people come through here watching what I'm saying. But out of a couple of thousand, only 1 or 2 actually send me their number, and I actually call them. What are your thoughts on DeFi trading? I have no idea what DeFi trading is. Okay, see, I'm from the old school. So old school where it's commonplace to say, if it ain't broke, don't fix it. If you found something that works, don't mess with it. Okay, so I came up with this trading strategy 15 years ago when my daughter was 9 years old. She wanted to learn how to trade what Dad was doing because, the 2 boys were doing what they were doing and I only had 1 little girl and she wanted to hang out with Daddy. At that age, at 9 years old, Daddy's king. Yeah, 13. I was the jester. I went from king to a jester. Yeah, no. Anyway, it is what it is. That's what kids do. But anyway, when she was 9, she wanted to trade. She wanted to learn how to trade. So I had to make a trading strategy specifically for her. It had to be simple, safe, predictable, consistent, and no way that she could lose. Okay, so once you get those 5 criteria done and out of the way, we come up with a couple of rules, 5 of them specifically. Number 1, Never buy a stock you don't want to hold. Okay? Go into every single stock, you look at it as if you want to hold it for the long term. TSM, huh, Felix? We'll write that down. All right, we'll take a look at TSM in a little bit, but let me finish my explanation. So number one, never buy a stock you do not want to hold on to because you just might have to. Rule number two, never sell at a loss. It defeats the whole purpose of the game. And don't think this isn't a game, because it is. It's kind of like Monopoly with real money and the stock market. Rule number three, make sure the company has increased dividends. It is the simplest and easiest way to figure out if they're consistently profitable. If they consistently increase their dividends, that means they're consistently profitable. Pretty simple. Fourth, okay, now I forgot to say that, I like 20 years of increased dividends, me personally. Fourth, rule number four, make sure it has weekly options. Weekly options so I can get a weekly paycheck. Now, without weekly options, I'm going to have to sit in front of my computer, and I don't want to sit in front of my computer. And I don't want to do monthly options, which are only done once a month. Okay, sorry, weeklies. Weekly options, 20 years of increased dividends. That's my criteria. Can you look at EMR? Emerson. Ooh, I like Emerson. EMR. Emerson Electric has been around for over 100 years also. First thing. High, low, was, is, direction. Okay, so high, low, where it was. Right there. Simple. It takes you less than 2 or 3 seconds. See, high, low, where was it? Where is it? What direction is it going? That takes 2 or 3 seconds. That's it. Simple. Once you do that, what am I buying it for? 104.34. Closest strike price to 104 is going to be the 104s, and then going for 110. Once you take the 34 cents off that, that's not quite 1%. So you have to ask yourself, do you really like Emerson enough to jump into it and it's not giving you 1%? There are a bunch of other companies that are giving 1% or more. So I like Emerson. I have bought Emerson in the past. But at this moment in time, the numbers are not very favorable. Okay, 103.69, 103.30, 104.30, that's a big spread. You might want to check first thing Monday morning and see if these numbers change. Because if these numbers change and it gives you a better fill or a better rate of return, fine. Then we can take a look at the last 30 days. What are the last 30 days? Well, here you go. Another perfect setup. Check it out. 30 days ago, we're at 110. She jumps up to 119. See that? 119, way over there. Falls down to less than 100, 99 and change. Okay, that is a $20 difference between the 120 and the 100. Well, here's the bottom right here. That was Wednesday. Thursday was an up day. Friday was an up day. What does that tell me? That tells me she found the 30-day bottom right here. Now she's going to the upside. I'm going to write it down, but I'm going to want to double check and make sure on Monday that's going to give me 1% or more, because those numbers are going to change. But we are going to write Emerson down for Monday. EMR. Alrighty then. KHC, threading the needle. We already looked at that one. Was that Wade? Was that VRT? What the heck is VRT? Verity Holdings. Never heard of it. So let's put it into Yahoo Finance. VRT. Yeah, I'm going to say no to VRT. Here's my reasoning. December 2020 was paying 1 penny. 2021 they paid 1 penny. 2022 they paid one penny. 2023 they paid 3 pennies. 2024 they paid 3 pennies. Yeah, that doesn't work for me. Sorry, VRT, Wade. Sorry, gonna be a no. Rosenbaumer. Rowe. Really? R-O-W-E. Never heard of them. R-O-W-E. T. Rowe Price. Alright. R-O-W-E is T. Rowe Price. But it's T. Rowe. T-R-O-W. So T. Rowe Price is a no because it's a monthly. Now, R-O-W-E is T. Rowe Price. Okay, but that's going to be a no because it's a monthly. Sonny Houston, Robinhood, really? Okay, Robinhood's going to be a no only because Robinhood doesn't have 20 years of increased dividends. Okay, but if you like Robinhood, more power to you. Okay, 30 days ago we were at 22.55, the 30-day top 24.93, and then Monday was the 30-day bottom. Check it out, 30-day bottom. 1, 2, 3, 4 days to the upside. Perfect opportunity to jump in if you like Robinhood. Now, I don't trade Robinhood because Robinhood doesn't have 20 years of increased dividends. I don't even think they have dividends. Well, let's find out. I go over to Yahoo Finance, put it into the historical chart, and it says right there, there are no dividends in the selected time frame. Okay, so there are no dividends for Robinhood. So, Sonny, if you like it, more power to you. Threading the needle, perfect. Jack, where do you find seasonality data? Well, that's an interesting question. More than likely, you should be able to go to Google or Bing or whatever search engine you use and put in a search bar, seasonality stock chart. Okay, seasonality stock chart, and find out where you can get it. Okay, as far as I know, there are a couple of companies that do have the seasonality charting available. I just like Thinkorswim because everything is included. Okay, I can look at my dividend calendar. Okay, my dividend calendar, it tells me when the stocks are paying out their dividends. Well, I like that because that's how I decide when to take a look at what companies. Because I look at only 300, but I only look at 1 week at a time. I look at this week right here. I'm only going to be looking at Apple, ConocoPhillips, PPG, U.S. Steel, Clorox, Kroger, ExxonMobil, Emerson, Hershey's, RTX, Starbucks, and Walmart. And those are the only companies I will look at that week. And I honestly don't care about anything else, but those are the ones I'm looking at this week. Okay? Next week, I'm only looking at these. I don't care about these anymore. Their time has come. Now, what I mean by that is every 90 days, I will look at the exact same companies. So look up here, Kinder Morgan, KMI. Kinder Morgan, the last day of July. All right, well, 90 days will be the last day of October. Yep, last day of October, Kinder Morgan will be up again. The last day of January, Kinder Morgan will be up again. The last day of April, Kinder Morgan will be up again. Every 90 days, I will be looking at Kinder Morgan. It's going to be a yes, or it's going to be a no. Okay? If it's a no, I'll see you again in 90 days. I will constantly look at it every 90 days. The same with Ford, Intel, Kroger, ExxonMobil, Walgreens, Target, all those companies. Every 90 days. Okay, if the numbers work, great. Numbers don't work, lovely, marvelous, but it is what it is. Can I look at IVR? Where'd I that list? That makes no sense. I'm so effing king cool. Alrighty then. Can I look at IVR? Jeremiah, I've never heard of IVR, but if you want to take a look at IVR, Well, let's take a gander. IVR. Okay, Invesco Mortgage Cap REIT. That's probably going to be a no. IVR. Here we go. Well, let's take a look at the dividends for IVR. I can tell you this is a no right away. Okay, first off, number one, they've only been paying dividends from 2009, not quite 20 years. Okay, 2009 it was $6, $6.10, $10.50. Now the dividend was $10.50, and they dropped it down to $7.80. Then they dropped it again, $7.40. They jumped up to 10, dropped it to $9.70, back up to 10, $9.70, 8, and then from 8, it really starts dropping. $6.50 for a while. Then they dropped it to 5. Then they dropped it to $4.50. Then they dropped it to 4. Then the $4.20 to $4.50 to 5. Then from there, check that shit out. Oops, sorry about that. 2019, it was at $5. 2020, 50 cents, 80 cents, 90 cents, 40 cents. In 2023 and 2024, tell me that that's a profitable company. If they're profitable, why do they keep cutting their dividends? Now, if a dividend is a portion of the profit entitled to the shareholders, if that number gets smaller and smaller every year, well, it kind of tells you that the company's not as profitable. Sorry, I'm so effing cool to... Where's the list? Well, here you go. You ready? The list. Go to Google. Insert into Google search bar Dividend Kings List 2024, Dividend Aristocrats List 2024, Dividend Champions List 2024, Dividend Contenders List 2024, Warren Buffett's List 2024. That is 5 lists right there. Those 5 lists will give you over 300 companies that have consistently increased their dividends. All right. Hood. Sonny, Hood, we already looked at that, so no. Gina, do you think Intel would make it back to $30 anytime soon? Well, let's take a look. Now, I did have Intel about a week or so ago, INTC. Let's quickly do some INTC. INTC, Intel, first and foremost, high, low, where was it, where is it? Look at this big gap down. I love that, because you're going to make your money when you buy low and you sell high. Well, you cannot get any lower than the low of the year. Look, if the high of the year is over 50, the low of the year is in the 20s, that's over a 50% drop. Well, is Intel. We're not talking about some strange company you've never heard of. Most likely you've heard of Intel. Okay, right now at 1980, the 20s are going for 34 cents. That's over 1.5%. I'm okay with that. But here's the question, and this is a biggie. Do I like Intel at 1980? Am I willing to buy it and hold on to it for a long period of time? Well, yes, I am. But I would prefer to buy it at 1980, sell someone the rights to buy it from me 20, get 1.2%, and then be cashed out. Because as much as I like it, I prefer weekly cash flow, and I will consistently look at Intel, because every time you get the numbers that I like, well, let's take a look at those. Okay, so we're going to take a closer look at Intel. A year ago, we're at 34.78. The end of December, she topped off at 51.42. Now, from 51.42, she drops all the way down to 19. That's a 50% drop in less than, well, about 7 months. All right, fine. Last 30 days. Here we go. 30 days ago, we opened up at 34.44. A week later, we're at the high at 37.16. Now, from 37.16, look at the big drop. Okay, the bottom of the 30-day period was yesterday. Yesterday was the new 30-day bottom. Okay, we have an update today. So yesterday's a bottom. Today was an up day. I'm looking at the 1980s, selling off the 20s, getting 34 cents. That's over 1.5%. Now I know 1.5% doesn't sound like a lot, but 1.5% per week comes to over 50% per year. And that works for me. This is what I do. This is what I personally am looking for. A good company that I've heard of, okay? And the chart is telling me the right time to buy. Because I don't want to buy it when it's at the high. And I don't want to buy it when it's at the bottom. I want to buy it when it's bouncing off the bottom. Because remember, you can only have one high and one low. Okay, well, at this moment, we're looking at the 30-day chart. The 30-day chart is going to have 30-day high and a 30-day bottom. And look at the gap right here. Now, if you know anything about stock trading, you know gaps, especially something that looks like this, have a tendency to fill. So if I'm buying it down here at the low of the year, and I have a gap right here taunting me, saying, buy me, buy me, buy me, you know what I mean? Because we're at a 30-day bottom, one day to the upside. We have one Monday or Tuesday, could be a second day to the upside. Great time to jump in, and then she's going to go back up. I'm actually going to write Intel down for next week. It's already written down for next week, so we've already found it. So, to answer your question, Gina, she's at 20 now, right around the $20 area. When is she going to increase to 30? That I honestly don't know. But you have this big gap telling you that it's going to happen eventually. The question you got to come up with is, do I like Intel at this current price? If you don't already own it. And if you're asking when is it going to go back to 30, well, it sounds like you already own it. Here's one we haven't looked at in a while. QCOM. Oh, we have more questions. KLG. KLG. Kellogg's. Well, Kellogg's is going to be a no only because it's a monthly. Sorry, monthlies just don't work in this strategy. It works in this strategy, but the numbers aren't the same. Okay, you can kind of expect to get between 12 and 24% from monthlies. And if you think about it, well, great, I only have to do it once a month. Yeah, that's kind of nice. But then again, if you're wrong, right? See, right now it's at 17. Well, where's it going to be in 4 weeks? How the hell am I supposed to know? I'm going to give you an idea, because it goes up, it goes down, it goes up, it goes down, now it's going back up again. Is it going to go up for 4 weeks? No, it's going to go up and then it's going to come back down again. Well, how am I supposed to know what it's going to do? I don't like monthlies. They're too hard, in my opinion, too hard to predict. And the numbers just don't work. Okay? If you look at the number, right now it's at 17. The 17s are going for 5 cents. Well, that's not a 1%. Why the hell would I do that? And if I'm wrong, I have to hold it for another 4 weeks. Other companies have higher implied volatility. Chris, you're 100% correct. However, for this particular trading strategy, implied volatility has nothing to do with it. Okay, remember when I said it was created for a 9-year-old? It had to be simple, safe, predictable, and consistent. So implied volatility is one of those, how do you explain that to a 9-year-old? You know what I mean? Okay, so for the 9-year-old, if it's on the chart for this week, if it's on the calendar for this week, we look at it. Great. What are we looking for? Well, first thing we're looking for is the high, the low, where was it, where is it, what direction it's going. Okay, fine. It takes a second or two. Next, what we're looking for, what can I buy it for? What can I sell it for? And is that going to be 1%? Okay, fine. If that works out, what's the chart telling me? Okay, we look at the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality. What do they all tell me? Okay, what this chart is telling me right now, 30 days ago, we're over here. Down, up, down, up, down, up, down, up, down, up. Now she's going to the upside. Okay, fine. But the numbers don't work. So that's a no. It's actually that simple. Okay, you find out when are they paying their dividend, and that's on the calendar. Okay, from the calendar, you go to the chart. High, low, where was it, or is it? It's really that simple. High, low, where was it, where is it, what direction is it going? Fine, that's easy. Now, what are they paying me? If I'm buying it for $17.89, the 17s, yeah, it's not enough money. That's a no. And then we go on to the next one. There are too many other good companies. Why would I waste my time and energy on one that doesn't fit the parameters? And the parameters are simple. 20 years of increased dividends, weekly options, and do the numbers work, the 1% per week. What do you think about DeFi? Trading being your own bank. To be 100% honest with you, I don't know all the details to it. Now, if there's a possible way of me making over 50% per year and using my own money and not being able to pay taxes, and what are the other perks? I don't know anything about it. Now, usually, and this is just me, usually if I find something that works, I try not to mess with it. Because I could sit here in front of my computer and make more money, but then I'm trading my time for money. And as you get older, you'll find out that money has less and less value the older you get. And you value time more than you value money. So that's where I'm at my life. I value my time. I like watching the grass grow. This morning I was out planting in the garden. That works for me. Alrighty. Lily is back. I have no idea what that means. 86. Key, look over 1%. 450s on Key. Okay, 86. I think we already looked at Key. KEY. The 1450s. Okay. The 1450s are 31 cents. Okay, correct. But if I buy it at the market price at $14.75, I'm losing 25 cents right off the top. So that 25 cents on the purchase price, $14.75, selling the 1450s, 25 cents I'm losing. You take it off that $6.31, you're left with 6 cents. 6 cents on a $14.50 stock? Yeah, that's not even 0.5%. Sorry, 86. It's just not quite. Yeah, you're missing. Okay, 86. You're missing the point. The fact that you're buying it at $14.75. So if you buy it at $14.75 and you sell the 1450s, you're losing 25 cents right at the top. And once you do that adding and subtracting, you're only getting 6 cent profit. So you're walking away with 6 cents on a $14 stock. All right? Sorry if you didn't see that earlier. Queen J, I don't have that much funds. What's a good stock to buy 100 shares? Ooh, well, I haven't done this in a while, so let's check this out. Watch list. Let's open this up. All right. Now, Queen J, you're looking at this. Siri is $3.14. Nokia, $3.81. GNW, I don't know what that is. $6.41. GT, $7.70. KGC, $8.48. HLF, $8.83. NUS, $10. AGNC, $10. Ford, $10. Vail, $10. CLF, $13. PBR, $14. Macy's, $15. NOV, $17, so on and so forth. Now, if that doesn't work for you, you can always do dividend capturing. Now, dividend capturing is a fun one too. Let's get this out of there. Let's go here. Let me show you briefly what dividend capturing. All right, so let's take dividend capturing just for the fun of it. Moving to July. So let's take a look at Pfizer. Okay? Now, let me briefly show you. This is for you, Queen. You ready? Now, dividend capturing is a nifty. There's two different strategies I'm going to show you really quick. One is dividend capturing. That's where you buy the stock before the EX date. Now, each one of these little green dots is an EX date, the last day the stock trades before the dividend's paid. So if you want to collect the dividend on Pfizer on the 26th, you have to buy it the 25th, 24th, 23rd, the 16th, 10th, 1st, 3rd, whatever, before the EX date. Okay, Pfizer, PFE on the 26th. As long as you buy it before this date, you are entitled to the dividend. That's one. Okay, now, I like to buy 10 days before the dividend and on a Monday. So if the dividend's here, 10 days prior to is the 12th. Okay, 26, 5 days, 10 days, on a Monday, on the 8th. So we're going to take a look at July 8th, and Pfizer has a 42-cent dividend. All right, so watch this. July 8th, PFE. Okay, July 8th. See it right there, July 8th. The stock was right around 28. A couple of days later, look, it's at 31. Okay, normally stocks go up before the EX date. So that's just one. Take a look at another one. Lowe's on the 24th. So again, we'll be looking at the 8th of July. LOW. July 8th. Okay? July 8th. 10 days before on a Monday. Goes up. Now, does it happen all the time? Nope, but it happens a lot. Happens enough to a point where I actually have software in my computer that goes back and looks 10 years prior to. So if I put in Caterpillar BK, the software that I have will actually go into the data stream and look how it is performed over the last 10 years, directly related to the EX date. How many times over the last 10 years did it hit that price? Dividend capturing and dividend capturing 2.0. Same thing. Well, a little bit different. Book 1, book 2, I think it was. So I've written 14 books. Book number 1, how to get 10 to 20 checks per month. That's one. Book number 2 is dividends on steroids. Okay, and I believe dividend capturing 2.0 was book number 14. Not 100% sure. 86. Key is 1461, not 1475. Oh. Alright, 86. You've been here long enough. You should know. The last traded price, 1461. Last traded price. The bid, what I could sell it for, 1452. The ask, what I can buy it for, 1475. So just because the last trade was 1461, the market maker is his obligation. It's basically his game, his show. Okay. Now you and I create this mess. Okay, we create the highs and lows and the close. We have no control over whatsoever the opening of the day. That is the only price that is being controlled by one person and one person only. That is the market maker. So the market maker is the only one who knows what the stock is going to open for the next day. Other than that, everything's out of his hands. So he will say, all right, it's going to open. Today, it opened at 1454. See? The market maker, he has control over that. The opening of the day. The high of the day, that's you and me. We buy, we sell. Okay? If we think it's worth more than 1454, we're going to buy it. Well, and we did. And it went to a high of 1463. That's this number over here. Okay? You and I, we decide the highs and lows. But the market maker, he decides the opening of the day. Now, the last traded price, 1461. The bid, 1452. The ask, 14.75. So if I want to buy it on Monday morning, I'm going to be paying $14.75. Now that's the current numbers that are here at this moment in time. Remember that first thing Monday morning, all these numbers are going to change. And throughout the day, they change like this. Constantly changing, constantly changing. So when you jump in, it's kind of like jumping on a moving train while you're on horseback blindfolded. I like that analogy that guy used. All right, 86, hopefully that explains it. Arman O. Miranda. Are dividend stocks worth if you don't have much capital? Ooh, now, I don't know if this is Arman or if this is Miranda. But either way, now, hypothetically, I'm just going to, shoot from the hip. I'm assuming, okay, it sounds as if you're just getting started. If you are just getting started, take your time. The stock market's been around for over 400 years. It's not going anywhere. Learn as much as you can. Find a strategy that works for you. Okay, there are a lot of strategies out there. There's so many, it's mind-boggling. This strategy here particularly was created for a 9-year-old. Okay? Simple, safe, predictable, consistent, 1% per week. That's my personal goal. Now, you might find something else that's different for you. Now, you can always take a look at dividend capturing. All these little green dots tells you when a company is paying out their dividend. Okay, now these are stocks that are on my particular list. Let me show you what actuality is there. Okay, now what you're seeing, let's get rid of this, is all the dividend stocks that are available in the month of July. Not really, but take a look. On the 1st of July, it looks like there's only one. No. There's 36. They just can't fit them all there. Okay, here's 3, 6, 9, 10 on the 2nd. The 3rd, 4, 8, 12, 16, 18. Look at this, Thursday. Oh, July 4th, no wonder why. Nothing there. Friday, 33 companies. A bunch. 41 companies. Look at them all. It's a whole bunch. Those are all the companies that are paying out a dividend. All right, simple. You go into the chart. You're better off with Yahoo Finance. Go to charts. Okay, wait for the chart to load. Okay, now. Now, this is not a very good one to choose from, so let me pick another one. MSFT. It has better numbers. Alright, here we're looking at Microsoft. Keep going. It's not allowing me to see all of them. What do we want to look at? Alright, 5 years. Alright. Do you see all those D's? I don't know if you guys can see that okay. Okay, these right here, those are all the dividends. Okay, dividend, so on and so forth. Alright, so you zoom in really close, really tight. Alright, here's the dividend here. Okay, dividend stock went up. Dividend stock went up. Oops. Okay, dividend stock went up. Keep going back and forth. Keep going. All right, you know what? Here's another one right here. Historical data. This one's even better. Okay, historical data. It gives you the date, the opening price, the high price of the day, low price of the day, the close, the adjusted, and then the amount of volume. How many shares traded. So slide down. Wait till we find a dividend. Oh, there it is right there. Okay, May 16th, 2024. I'm not quite sure how well you can read that. But if you didn't know, the chart behind me, this big huge chart back here, is live on YouTube. You can actually watch it on your big screen TV. That's one of the reasons why I broadcast on YouTube. Okay, a lot of cable channels will allow you to watch YouTube, and you can see this on the big screen TV. And just to let you know, over the next few months, the few years, I will be upgrading, so maybe I'll have a Vanna White saying, and here we have the... Okay, so anyway, here's the dividend here, the 15th of May. Now, count back 10 days. Okay, 2, 4, 6, 8, 10. The dividend's 75 cents. You got the 75 cents to the opening price, the $3.97, and that's going to give you, $3.98 and change. Well, the high of the day was $3.99. You actually hit your target that price. The very next day is $4.07, $4.13, $4.14, $4.15, $4.18. Yeah, so you're out very quickly. Okay, so take a look at a good dividend stock. Find out where the dividend is in the data stream. Okay, Yahoo Finance has it, Google Finance has it, NYSE, New York Stock Exchange, they have it. There's a lot of financial websites that will actually have the data stream, which is the dates, the open, the high, the low, close, blah, blah, blah. See what the dividend is, 75 cents, 10 days prior to the dividend date, May 2nd. Buy it at the opening, you add the price in there, boom, you're out with the profit. That's dividend capturing 2.0. Now, dividend capturing, you just buy it before the EX date, get the 75 cents, sell it for a profit. Because the big difference between dividend capturing 2.0, and then dividend on steroids, is they're all based around the dividend. And the reason why I have them based around the dividend, because if the company is profitable, they're going to increase their dividends. It's the shortest cut. It's a shortcut to find out if they're profitable. If they're profitable, fine. That's where I want my money to go. I want my money to go with a company that has a historical record of consistently being profitable. Now, I'm not looking for capital appreciation. I'm not looking to buy it at $10 and selling it at 14. I'm not looking for that at all. Hell no. I'm looking for safe, predictable, consistent 1% per week. So if I get it through capital appreciation, if I get it through the dividend, if I get it through covered calls is the simplest and easiest. It's one of the safest strategies there are. You buy the stock, you sell somebody the rights to buy it from you, they pay you a premium, and that premium is usually higher than 1%. 1% per week is over 50% per year. And that works perfect. Holy cow, it's almost 11:30 already. Where the hell's the time going? It just flows by. Like, didn't it? All right, anyway, let's keep on moving. Dividend stocks worth it, don't have much capital. Yep. What you trade exactly? Asaf, I just said dividend stocks. I missed a lot of these questions. Gee, KMB looks like a good setup. Well, let's take a look at KMB. Not Kimberly Clark. KMB. The reason why I know it's Kimberly Clark is because Kimberly Clark is the longest I've ever held anything. I held it for 9 months last year. Okay, I bought it, she dropped, held it for 9 months before it finally came back. All right, high, low, where was it, where is it? The bid, 139.87, the ask, 140.76. We're looking at the 141s, 90 cents, not quite there. Okay, so I'm not 100% sure if that's going to work for you. For me, I would prefer. I like IEP, $1 a month. User 87.88. Well, you know what? You can lead a horse to water, but you can't make it drink. Now, IEP has consistently decreased its dividends over the years, so they're consistently losing money. Also, look at the rate of return you're getting. You're getting $1 a month. Whoopee. Okay, so you're getting $1 a month. What does that mean? IEP. Okay, summary for IEP. 24% a year. Nice, not bad. Historical performance. Okay, dividends only. Maximum amount. Okay, now You're not getting $1 a month on IEP. You're getting $1 per quarter. Every 90 days, you're getting $1. Now, take a look. Take a look at the dividends on March 2019. March 2019, they went to $2. May 2019, $2. August, $2. November, $2. 2020, $2. 2021, $2. 2022, $2. 2023, $2. They haven't increased their dividends in 4 years. But you know what they did in the last 4 years? They went from $2 a share to $1 a share, which means they've cut their dividend in half. And you're telling me that that's a good deal? Sorry. Okay, the school that I went to taught math a little bit differently. They taught me as if the numbers are increasing, well, they're getting more profitable. If the numbers are decreasing, well, they're losing money. Okay, now, my math teacher may have been wrong, Mr. Alsheimer, nice guy. Anyway, I think, personally, if they keep decreasing their dividends, they're losing money. Why would you invest your money into a company that's consistently losing? I'm freaking cool. Finally, I got the list. Thanks. I again was out of the car and got to write them down. Hey, dude, it happens. 86. Carlo, Disney, Walmart, Apple. I believe he likes next week. Yep, those are the ones I did. Jack, I am in the August 16 calls too. Cool beans. Gary T, how much open interest are you comfortable with? All right, Gary T, you're starting to ask questions that have nothing to do with the strategy whatsoever. Now, interesting thing, now, I'm not quite sure how you're going to take this, but the trading strategy was created for a 9-year-old. Simple, safe, predictable, consistent. The rules were very simple. Never buy something you don't want to hold long term. Never sell at a loss. Make sure there's 20 years or more increased dividends. Weekly options, and then make sure the numbers work. That's it. It has nothing to do with the Greeks, nothing to do with implied volatility, nothing to do with Sagittarius rising over the moon, nothing like that. When are they paying their dividend? Are they consistently increasing? Are the numbers working? Does the chart tell me it's the right time to buy? Now, what do I mean by the chart telling me the right time to buy? Well, look at this right here. Okay, your 30-day high here, she drops here, she shoots up. Where is she now? Where is she going? No clear path. Okay, it's kind of 50% between the high and the low. No clear path there whatsoever. I like simple, safe, and predictable. Remember, it was created for a 9-year-old. Adults, I'm one of them, because I do it too. We have a tendency to want to complicate things. All right, just because the chart is telling us one thing that's going to the upside, all right, we still want to throw in stuff like, oh, what's the delta at? What's the implied volatility? Okay, either you like the stock at the price 140.76, or you don't. Okay, either at 140.76 it's paying 1%, or it's not. So you have to decide: do I like the company? Do I like it at this price? Am I willing to buy it and hold on to it? And what am I making? If I'm not making about 1%, if it's the wrong time, then it's no, I don't want it. Oh, Hakuna, what's happening? All the way from Sweden. Cool beans. How's it going? How much open interest? Yeah, Gary T, I don't think I'm open interest at all, but you know, as you get older, you might want to add things, take things away. What's the minimum a person could invest? 50 cents, I think. Bisky 77. How? I'm not quite sure what that means, because I don't get your other questions if you had something on before that. Ivan, where do we get your books? Ooh, good question. Amazon, I believe. All right, you can go to The 10 Minute Trader. Okay, now I am going to update all this stuff. Okay, got to view all because I haven't got all the links in the right place yet. Jonathan, is this Tony Hawk? Yep, this is Tony Hawk. Books by James. Here they are right here. Books by James. Amazon, look at this. Dividends from monthly cash flow. Receive 10 to 20 checks per month like clockwork. Dividends on steroids. Dividend capturing. Trading with dividends. Retire with $1 million. Top dividend stocks. Dividend aristocrats. Dividend kings. Blah, blah, blah. I got 14 books I've written. Believe it or not, book number 14 I finished, I think it was January and February, and I still don't have it uploaded to sell online. Green J, alrighty. 86, alright, you're welcome. Sammy said, I'm new. What do you think about Coke? I tried it once. Didn't like it very much. Did nothing for me. Oh, the other guy, Coca-Cola. Alright. Coca-Cola is a great company. They've been around for over 100 years. You know, when people tell me, there's a lot of risk in the stock market, I say, no, there ain't. Take Coca-Cola, for instance. They've been making Coca-Cola for over 100 years. It is the number one soft drink in the world. Not on the block, not in the United States, not North America, not South America, the world. Coca-Cola is the number one soft drink in the world. Do you believe in seasonality, that the market will bounce back in October, November? Well, Hakuna, I believe in seasonality, but to say that the market will rebound in the third and fourth quarter, and the end of the third quarter being the fourth quarter, October, November, it's fourth quarter, sorry. That's usually spurred on by people going back to school and the election. Okay, so there's some weird stuff. Now I remember when the president, when Trump was elected. Okay, I saw stocks that went from here to here in like 2 or 3 days, only because Trump got in office. Stocks just jumped up. Some stocks dropped. Now that happens once every 4 years. They call that the presidential effect. So anyway, Coca-Cola. Take a look. Number one, Coca-Cola was at a high of the year, so it's going to be a no for that. Not that I dislike Coca-Cola. It's just that with Coca-Cola, the numbers are always crappy. All right, 68.86. So I'll be looking at the 69s. The 69s are going for 41 cents. I have never seen Coca-Cola offer more than 1%, ever. And I've been doing this for a while. And I like Coca-Cola because they're consistent. Okay, they've been increasing their dividends for over 50 years. That's 5 decades. They don't have to have attractive premiums because they are the king of soft drinks. Sammy, Special K. All right. Any stock you recommend to buy now? OT, terribly sorry, dude. I do not recommend anything to anybody because I have no idea who you are, what your risk parameters are, what your goals are, what your financial situation is. So I really can't give you any advice other than continue to learn as much as you possibly can. Because one thing they cannot take away from you is knowledge. Once you learn something, once you see it, once you see what to look for and how to make a profit, they can never take that away from you. Okay, so learn as much as you can, and I can't recommend anything. I can recommend you keep coming back and learning as much as you can. It's not costing you anything to come here and learn. Okay, well, it's just costing you your time. Ask a question. You asked a question, I gave you an answer. You ask a better question, you can get a better answer. Okay, the quality of your life is going to be directly related to the quality of the questions you ask. How can I invest my money, make it safe, predictable, consistent, 1% per week without much risk to my time and not much time spent doing it? That's an excellent question. Okay, how do I make money? Well, go buy a bunch of newspapers and sell them on a corner. Go grab a bag of oranges and sell them on a street corner. There's lots of ways of making money. You have to be more specific of what it is you're looking for. Usually August, September is a valid month. Yeah. Usually. Jim Cliffs, I don't do pink sheets at all. Okay, now, when you get to a certain point in life, all right, let's call them stages. It took me for the longest time when they say get to the next level. I think, what the hell do they mean get to the next level? What level am I on? Where am I going? What level am I going? I never could understand that until it dawns on you. Okay, there's certain phases in life. Well, you have a childhood. That's your childhood. Then you have adolescence. That's when you're learning to be, a teenager, and then you're going into an adult. And then you get to adult, and then you get to what do you call it? A 9 to 5, or you actually join the workforce. And then you have a certain mentality. And then you find someone, get married, raise a family, buy a house, and then you do that thing. And then you're in that stage. And then all of a sudden your kids move out, and then you have grandkids. And now it's like, well, I really don't need the amount of money I was making before, because it's just me now. Okay, and everything changes. Well, now I'm at that point in my life where it's just me. I have a chunk of change that has got to last me for the rest of my days, and I like to have something to leave to my kids, other than a beat up old pickup truck. You know what I mean? But Pink Sheets, if I was younger, maybe, because they're a gamble. Okay, because you don't know how many Pink Sheet companies went from Pink Sheets to 20, 30, 40 years of increased dividends. Hiring thousands upon thousands of people. Yeah, there probably are some, but probably more not than there is. CP Jim Never Binsky, how does one get a chart like that? Well, this here is Thinkorswim. You can actually go to thinkorswim.com and download this trading platform. Now, this trading platform is owned by Charles Schwab. Now, I'm pretty sure, last I checked, they will let you use it for free for a while, but eventually they would like you to upgrade and get an account with them. Now, I like Thinkorswim because it has so many interesting perks that other trading platforms don't have. And I've been using it for close to 20 years. It was actually created by a professional trader. Okay, so a trader actually made this, and he made it the way that he wanted it. Right? Well, I think it's pretty damn cool. Holy cow, it's 11:30. Time is gone. We're going to go through the last 23 questions, and we're going to call it a night. Yahoo Finance, Thinkorswim, thanks. Bensky, you're welcome. Sri, how are you? You sell options on every Monday or any specific day when the stock goes up. Now, Sri, I really don't look at the stock going up. I look at the chart. What's the chart telling me? Here the chart's telling me it's too high. Okay? Now, there's other ones. Which ones were we looking at specifically? CVX. CVX. Really? I want to show something, and one time I want to show something, it doesn't pop up. And it's not even connecting either. Alright, let's take a look at this one right here. Alright, here's the last 30 days for Nike. Alright. If you look closely, you'll see a pattern. Okay? Down, up, down, up, down, up, down, up, down, up. Right now she's in the middle of an upward trend. Great. Alright, that tells me one thing. What's another thing that I want to see? Well, once I see that it's in an uptrend, well, yeah, that's a good indicator to jump in and buy it. What's the current price? The current price is at $74.40. Well, the 74 is going for $1.20. You take the 40 cents off there, yeah, you're still making over 1%. The 75s are going for 70, between 70 and 72. Not quite 1%, but pretty close. So yeah, I do it on a Monday because if you think of it this way, okay, and a stock option is a depreciating asset in and of itself because it has a starting date and then it has an ending date. All the ones that I do have an ending date. 9 August. Well, that was today. All these options expired today. 16 August. Well, all these options are going to expire next Friday. And then 23 August. Well, that's 2 Fridays away. 30 August. That's 3 Fridays away. Okay? So from the time I buy it to the time I sell it, and I buy the stock on Monday, I sell the option. That gives me 5 days of time value. So Monday it's 5 days of time value. Tuesday it's 4 days of time value. It's 20% less. Okay? Wednesday, 3 days of time value. Now it's 40% less. Okay? Thursday, I'm left with 2 days. Okay, as the time ticks away, the value of the option in and of itself decreases until it finally gets to Friday afternoon at 4 p.m. and then it becomes worthless. The option itself. But they have what's called intrinsic value, and they have a whole bunch of other things that's involved with it. So between the time value and the intrinsic value will give you an idea of what the valuation of the option is at the end of the week. So yeah, if I buy the stock on a Monday, sell the option on a Monday, specifically in the morning, okay, now I have that morning trading group. The morning trading group is on at 9 a.m. because I want to be able to take advantage of anything first thing in the morning. Okay, get there for 15, 20 minutes in the morning, make my trade good, I'm done for the week. And then I'll jump in Friday afternoon just to see if I was right or if I was wrong, if anything needs to be adjusted. Keep on going. My bad, Tristan. I meant Monday. Okay. Clinton. Rich Bruner, do you only buy cover on Mondays, Tuesdays? Basically, yes. Very rarely will you find me buying something on a Wednesday or a Thursday. Usually August and September are bad months. Do you have to register to download Thinkorswim? No, you don't. Okay, Thinkorswim, you can download that onto your computer, but you being in Sweden might be a challenge. You might want to think of getting a VPN. Get yourself a VPN, and then you can sign in New Jersey or Vegas or somewhere. But if you're trying to sign in from Sweden, say, yeah, I'm coming in from Sweden, yeah, they might say, oh, hell no. I don't know. Charlo, so smart and funny. Well, thank you for that. Enbel, Starbuckies. Yeah, we looked at Starbucks. Your top stocks? Well, hold on. My top stocks would be Macy's, Nordstrom's, AIG, Kohl's, those ones. And I do have some Starbucks. We already looked at Starbucks already. Michael David Robinson, have a nice night. Do you have to register download now? Starbucks, we looked at that. Top 4 to invest in. All right, AJ, I honestly can't tell you what to do. I can only show you what I'm doing. If it makes sense to you, you can make up your own decision. I do not give recommendations. I do not tell people what to buy. I take a look. Look, here's your 30-day high. Here's your 30-day bottom. It's going 4 days to the upside. If I buy it here, I sell this. This is what I'm going to make. That's how much my return is going to be. That's what I'm saying. I'm not telling you to do anything. You have to decide. Do I like Nike at this price, at this current moment in time? Does it make sense to me? Okay, we're all adults here. We are all responsible for our own decisions. I would feel very bad if someone said, hey, James, you made me lose all this money. No, no, no. I don't recommend anything. In fact, I tell people, don't believe a damn word I say. Go find out yourself. Pull up Nike on any chart you want. Find out where the 30-day high is, where the 30-day bottom is, what direction it's going. Fine. It's really not that difficult to figure out. Find out if you're going to do a covered call. Understand how they work. You buy a stock, you sell a covered call against it, basically selling your rights to someone else to buy it from you at a certain price by a certain date, and that person is going to give you what is called a premium or option consideration. Now, a call option or a put option is a legal binding contract because you need 4 items to make a contract legal and binding. You need a starting date and ending date. You need compensation, which is money. Okay? And then you need the 4th item. Meeting of the minds. This means I'm saying something and you're agreeing to it, and we have an agreement on what we're talking about. I'm buying a stock, you are buying it from me at a certain price by a certain date. That is the meeting of the minds. We both agree. You're buying options, which means you have the right to buy it from me anytime from when I sell it to when you buy it from me. 4 items need to be taken place for a contract to be valid. Anytime you buy or sell an option contract, that is a legal binding contract, and you do have your own money tied up in order to be able to do that. And that book, Risks and Characteristics of Option Trading, that big fat book you got to read before you can get approved for trading options, yeah, it tells you all that in there. Hakuna, I got the impression that you didn't like the chart when it looked at Nordstrom's. What was it you didn't like with the chart? Nordstrom's, JWN, Nordstrom's. Okay. Nordstrom's, a year ago, we were at 22.29. Fine, what the hell? Let's do a video on Nordstrom's. Do a video on Nordstrom's. Oh, alrighty. Here we go. I'm going to do a quick video on Nordstrom's, JWN. First thing you want to see, where's the high, where's the low, where was it a year ago, where is it now, what direction is it going? That's pretty plain to see. It's going to an upward direction. Great, fine. Now, what are we paying for it? We're paying $22.39. Okay, $22.39. The closest one is going to be the 22.50s. The 22.50s are going for 36 cents. We all know that 36 cents is more than 1%. Great. Now, what do we look like the last 30 days? Because the last 30 days is give me a good indication of which direction it's going to go. 30 days ago, we were here at 22. She jumps up to 24, drops back down, retraces. Here's our 30-day bottom at 1950. 1, 2, 3, 4 days to the upside. Well, that's an awesome stock. Everything looks great. I don't know what you're talking. Now, Hakuna, if I give you the wrong impression, that's one thing. But here's your 30-day bottom. 1, 2, 3, 4 days to the upside. And we still have plenty of space between 22.25 and the 24 30-day high. So Nordstrom's looks pretty good. You have to figure out, do I like Nordstrom's at this current price? Because if I buy it at this current price, I can sell somebody the 22s or the 22.50s and still get my 1%. I personally would go for the 22s. It's paying 62 cents. You take the 39 cents off there, you're still walking away with over 1%, and it's a safer trade. That's just my opinion. Okay? So, all that being said, we're at quarter of. We only have a few more questions. Got these few more questions, and we'll call it a day. Buy, sell, or hold. I don't like doing any of those. Get some sleep. Yeah, I'm tired. All right, Sebastian, what do I think about Intel dropping their dividend? I need to do a little bit more research on that, but I still like the chart, and I did buy some this year. I wasn't here for it. Can you go over it again? Sorry, dude, it's that time of night. I call it a night at 11:30. Thank you there, Sills. Oh, and that's it. Drazik, dude, I am just signing off now. Okay? Cool beans, glad you liked it. Have a good night, James. Woohoo! Okay, cool beans. Thanks a lot. All right, all that being said, everyone, this is James signing off from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for that safe, predictable, consistent 1% per week. And they're off. Next time, Drazik, 9 to 11:30. Okay, we are 11:44. I'm running a little late. I'm going to turn into a pumpkin soon, and you really don't want to see that. Have a nice night, everyone, and we'll see you again tomorrow night. Oh, I don't have to do anything tomorrow morning. Woohoo! Day off. All right, post for 30 days. Done here. Bye, all y'all. All y'all. All y'all. All y'all. And all right, let's cut. cut these all out. Oh, wait a minute. One more right down here. Hey, you guys. Hey there, hi there, ho there. You're as welcome as can be. Catch you guys all later. This is Dane from Dividend Stock Talk. Have a great night. And Maverick, hope you're a good little boy. Catch you later.